Our trade on Merck just made over 100% profit in 1 week after the stock made this big move. And now, in the final hour before the market closed, we detected another unusual trade worth $7.6 million. So if you're not in our membership and missed this profitable opportunity last week, don't worry, because in this video, we'll show you the latest data of how wealthy investors are trading Merck now, and how you can apply the same approach to catch big opportunities like this in other stocks as well. And if you're already profitable in this Merck trade from last week, we'll also show you how we updated our trade after detecting another unusual option activity worth $7.6 million, using a strategy to protect profits and manage risk. But here's the thing. To set this strategy up successfully, we had to position early, just like the wealthy investor we've been tracking, the one who led us to this winning trade. Last week, on this day, November 5th, we detected unusual option activity on Merck stock, giving us a bullish signal that the stock would most likely move higher. And that's exactly what happened. That's how the rich keep getting richer. They somehow know when to get in at the right time in the right stocks, and it shows exactly why we keep tracking their trades. As you can see here, this was the email we sent to members alerting them of unusual option activity detected on November 5th. And so we analyzed those unusual options being traded in Merck stock, ticker symbol MRK, and went long bullish when the stock was trading around $84 per share. And now it's trading around $90 per share. So even if you traded the stock instead of options, it's already profitable. So if you want to start getting access to the deeper insights that lead to profitable trades, including these email alerts, consider joining the membership on our website. We'll link it up here. Keep in mind that if you join the membership through YouTube instead of through our website, we cannot email you these additional trade alerts because YouTube does not share your email address with us. So if you want more opportunities to profit, make sure to join the membership through our website, where you'll get full access to the trades of wealthy investors and potential insiders so you can see what the smart money is doing before the trade becomes highly profitable. Now, speaking of profits, how much did this options trade actually make? Because knowing the exact profit is what allowed us to use a smart risk management strategy and set up our next trade based on the latest data from unusual option activity. So let's take a closer look at our trade, the same one made by this wealthy investor. These March 20 options at the 100 strike calls. At the time, this investor bought 8,000 contracts at a price of $126 each. Keep in mind that since options prices are shown here and each option contract controls 100 shares of stock, to get the actual dollar value, we multiply by 100 or simply move the decimal 2 places to the right. That means each options contract cost $126. So how much are they worth now? Well, let's check the option chain for these March 20 options at the 100 strike calls. And we can see here, these contracts are now worth between a bid-ask price of $277 to $287 compared to just $126 when we first detected and bought these contracts last week. That's why it turned into such a profitable trade now. And we can see here that there are still about 11,000 contracts open. Remember from our email, this wealthy investor initially bought 8,000 contracts, so those have not been closed yet. So we still have some of our positions here marked as POS with the green color indicating a buy position. But we started trimming our position and locking in profits. So how much return on investment did this deliver? Well, let's take a look at our original analysis using the risk profile graph, focusing on these March 20 options at the 100 strike calls, which were priced at $126 per contract when we entered this trade. And so on this graph, our profit or loss shows up here, and the x-axis represents the share price of the stock, which is currently trading over here, and the y-axis represents the amount of profit or loss. Keep in mind, this graph already includes the cost of the trade. That's why you can see in the blue line that if the stock had dropped down, it would have been a negative $126 loss per contract, the entire cost of the trade when we entered. But instead, it went up higher to about here. So we have a profit of $155 per contract. And so to calculate the profit percentage, we take the profit of $155 and divide it by the initial cost of $126 and then multiply by 100 to express it as a percentage, and that gives us a return of 123% profit in just 1 week. And so this is yet another real-time example of how we keep winning using data-driven analysis and trading strategies that track the trades of wealthy investors. Because understanding where smart money flows gives us deep insights into potential stock moves in the market. The rich often have more access to exclusive research and information, sometimes even leaked insider information, that help them make better, smarter financial decisions. This is how smart money always stays one step ahead, well before the rest of the market catches on. No wonder the rich get richer. And so, if you want to get access to more of these insights from the rich, then just head over to our website. We'll put a link up here, where you can see exactly which stocks wealthy investors are trading on Wall Street and when they're doing it, so that you can have the same opportunities as the rich. Because if the rich get richer, why shouldn't you? Now, with that being said, not all trades by wealthy investors are winners. Some end up as losses. Nobody wins on every trade. That's just the practical reality of trading. And so, to stay consistently profitable over the long run, we use strategies with a better risk-to-reward ratio to maximize profits and minimize losses. So as a real-time example, let's go over how we used new data to adjust our trade here, turning it into a trade that gives us more upside potential while managing risk to reduce possible losses. As we can see here on the options time and sales tape, there was unusual option activity in the final hour before the market closed on November 11th at 3:42 p.m. at the 39-second mark in these April 17 options at the 100 strike calls. 2 transactions were made at the same exact time for the same options at about the same price of $310 per contract, or $310 after moving the decimal 2 places to the right. And so we can calculate the total cost this wealthy investor spent by multiplying the price per contract by the total number of contracts traded. Since these trades were for the same options, we first add up the quantities: 19,798 plus 4,950, which equals 24,748 contracts in total. Next, we multiply the total contract by the price per contract, which was about $310 each. This gives us a total trade cost of approximately $7.6 million for this unusual option activity. But keep in mind, just because a trade is large does not necessarily mean it has a high probability of success. In fact, this one carries more risk than the smaller, more selective trades we share on our website. And so if you want to get access to those lower risk trades with a higher probability of profit, then go to our website. We'll put a link up here. Now, with that said, even though this trade carries higher risk, we still took it, but only because we locked in profits from our original trade by using an options rolling strategy to reduce exposure and manage risk. So let's go over exactly how we did this. As we can see here on the option chain for our original trade in these March 20 options, we started closing out most of our positions by selling the 100 strike calls, locking in profits, and then rolled into the new unusual trade at a later expiration date, matching the activity we saw on the options time and sales tape. These April 17 options at the 100 strike calls, which is where our new position is now, marked as POS, with the green color indicating a buy position. And notice how there's about 29,000 contracts opened here, which is more than the 24,000 contracts just traded. That makes sense because it shows this wealthy investor opened new contracts here, adding to the existing open interest. This shows that this wealthy investor opened new positions here, not closed them. This data is very important to confirm because if a wealthy investor is closing out contracts or trades, it could mean it's not the right time for us to jump in since they're getting out of the trade. On the other hand, if a wealthy investor is opening new contracts, it could signal an opportunity for us to start a new trade. This is why we always take the extra steps to verify the data at a deeper level. Many other websites and scanners simply flag every high volume options trade as unusual without filtering out closing trades. That's what leads to false signals, wrong conclusions, and unnecessary losses for anyone following unusual option activity. But our deeper analysis filters out those false positives, which is why we consistently find more accurate and profitable trades than other websites. And in this case, our deeper analysis confirmed that this wealthy investor was opening new contracts here at the 100 strike calls. So we used the profits from our original March 20 options to buy these April 17 options. That means we entered this new trade at a lower cost, a smaller debit, reducing our risk by using gains from our earlier trade. And so when we analyze our trade now, we can see here on the risk profile graph, the buy position cancels out the sell position because they are the same March 20 options at the 100 strike calls. So we are just left with the April 17 options at the 100 strike calls. And so on the graph, we can see that if Merck stock drops from where it is now, our trade would not have a negative loss unless it falls significantly lower. And even then, the loss would be small. This is how we manage risk, by minimizing losses while still staying in the trade to gain more profits if the stock moves higher. But keep in mind, this strategy was only possible because we followed that smart, wealthy investor early, just last week, before the stock surged higher and gave us a 123% profit in just 1 week. So if you want to get access to our strategies backed by our deep analysis and trade alerts, just like this one, where a well-informed investor entered this options trade early before the stock took off, then sign up on our website. We'll link it here. Because the next time a wealthy investor makes an unusual trade, you'll want to be in early, not chasing after it's already gone up. As always, please like, subscribe, and until next time, let's keep tracking the trades of the rich so everyday investors can profit too. Take care and have a wonderful day.